You're listening to Hardscape Growth, a podcast for hungry professionals who want to grow their businesses and level up. Ladies and gentlemen, welcome to another episode of the Hardscape Growth Show. I'm your host, Alex from TechnoBlock, and today we're joined by Todd Tomalak from Zonda. They do basically forecasting and research for the building construction and home construction industry. So Todd is uniquely positioned with a ton of information on what's happening in the market. And especially given what's happening economically, we figured why not talk to someone whose job and career has really been to study what's happening, to tell us what are the trends that are going on and how can we as hardscapers capitalize on that situation. So Todd has built a reputation as one of the most thoughtful and diligent forecasters in the building products industry. So he's great at looking at what's happening and predicting what's about to happen next. He spearheads Zonda's building products advisory practice, and he does some of the most impressive stuff. And he's definitely a good follow on LinkedIn because every post that he has some little nugget of wisdom of like, that's probably what's coming around the corner, and you can adapt your business to that. Todd, welcome to the show, and thank you for joining us.
Oh, thank you, Alex. Looking forward to talk.
All right. So the whole reason I reached out to you to do this in the first place was a post that you did 2 weeks ago that was basically saying, and I'm just going to pull it up here, a byproduct, and I'm going to share my screen too, so that everyone here who's watching can see this, but I'm going to read it for those who are listening. Basically, what you're saying is a byproduct of the shift to smaller lots, homes, and housing affordability, the squeeze on housing affordability has increased the usage of patio pavers and other outdoor hardscape materials. So because the cost of building a home and buying property has increased so much, people want to maximize the use of that outdoor space is the way that I'm interpreting that. What we have on the screen is a couple of bullets that are kind of saying like what you're seeing and what that means. And we have a chart. So if you don't mind, Todd, why don't you tell us a little bit about what we're seeing here on the screen and what that means to our listeners here.
Sure. Yeah, this is very important. It's one of the numbers that doesn't get reported on a lot in the headlines because it's way in the details. But essentially, what we're seeing, it's gotten very expensive to build a home or to buy a home, as everyone knows. And the only builders that are really gaining any significant market share right now are the large production builders who are building, in these large pre-planned, master planned communities. And usually that means building homes closer together, less side yard, tighter and tighter and tighter because the land is one of the most expensive parts of the build. And so what happens as you go from 3 homes to 4 homes to 5 homes per acre and up, we see the builders change the design of their homes, typically to include more patios. So for example, in this chart, going from 5 homes an acre to 7 homes an acre, which if you're a single family, this is for single family homes, that's a tight home. It's a tight lot. Increases the patio usage rate on new homes by almost 10% per home. So you're going from about 65% of them to almost 70%. That's installed on new builds. And part of the reason is because there is no green space in the back of the home. So what they do is they open up part of that back area and pave it and try to give some semblance of like a private area. So we're seeing a shift in home design, configuration, and there's a whole backlog of home improvement remodels that are tied to homes that are newish built that don't have these patios that are in the pipeline too. So yeah, we like home improvement, especially the patio and hardscape space in the long run, partly because of this.
You know what's interesting when you think about it, the difference between that 5 to 7, the smaller home, the 5 to 7 homes per acre, the smaller home, you need to be able to offer more value to the buyer. And one of the ways that you do that is by increasing the amount of usable space outdoors. All of us in the industry, we know the value that a great patio can bring to homeowners because it essentially becomes another room outdoors. But when you can sell it with that, you're realistically selling a much larger home than you're actually the client is actually paying for. So that there's that perception of added value, which makes a lot of sense for these tract builders to want to incorporate that. Because if you look out that back patio door and all you see is this tiny little patch of grass that probably isn't well drained and probably isn't growing very well and probably doesn't get a ton of sun because the houses are so crammed in together. And you combine that with the fact that today's buyer doesn't spend a lot of time gardening, doesn't want maintenance, putting some hardscaped surface in there makes a lot of sense. So financially, economically, market-wise, supply and demand-wise, there's a lot of good reasons for it. And what that means is our industry, the hardscape industry, is going to continue to grow because this is the current housing trend across the United States. Are there other things that you see or that you saw when doing this study that kind of are insightful for our group of people?
Yeah, let me touch on one. This matters a lot, especially when people worry about the near-term slowdown in housing numbers. So we are absolutely hearing some of the builders are seeing their sales slow down. They're seeing cancellation rates increase. Not as bad as it was at this time last year, but it's a legit worry if you're tracking the housing space. So usually when people in building products and home improvement try to think about what's happening with their business, the first number that they all know is the most recent housing start print. And our message around outdoor pavers, outdoor patios, anything in the kind of the hardscape arena is that is only a small part of the story for what's happening over the next 2 to 3 years. So here's two numbers.
Okay.
50% more. 50% more patio usage on a typical single-family home that's being built and delivered if it's installed inside a HOA community. Okay, so why does that matter? Because in the last 10 years, we've gone from about 46% of homes being built in an HOA community to right now about 70% of homes that are being built in a new HOA community. So
although housing starts may be down, the ratio of homes that are more likely to have a paver patio is significantly up. So overall, we're up.
Yeah, that's right. It's all about the squeeze. You're getting more juice per home because of where they're being built now than you were in prior cycles. Cool. And in fact, we've got some numbers even on the patio square footage per home, like when they are built, that's increased too. And we think part of it's because of the change in those rear windows, these sliding panel doors that open up the the rear living area of the home into the backyard. But I have some data. So Zonda collects some pretty interesting data. To the best of my knowledge, we are the only company that tracks like individual builders at the lot level. So I know exactly how many 120 square foot lots or 120 foot wide lots there are, and the next in Miami versus Fort Lauderdale, and where Lennar's building versus one of these custom builders are building, and what each of the because this is what we do. We have a whole team that collects this raw data. So if we go back, I'll pick over the last 10 years. 10 years ago, the typical single family home installed about 80 square feet of patio space on average. Now that's with some not installing any, and some that chose to install some space. But on average, it was about 80 square feet. Last year, it was just under 150 square feet per home.
It's almost double.
It's almost double, right? And that doesn't count the really special retrofit story that's developing. When we look, you can throw a stick and hit a building product category that'll claim that their category is benefiting because the housing stock is getting older. The story for retrofit for patio pavers is the opposite. 2x more likely on younger homes, less than 5 years old. Builders delivered it with pretty nasty backyards. They didn't deliver it. They were tight on time, tight on materials. They wanted to get the home off their books. But what it means is you have this wave of homes that we think were built over the last 7 years, especially since COVID, delivered under the gun. And those homes have yet to show up as home improvement projects. So we have a little bit of lumpiness, a little bit of pull forward among like the middle income demographic we think that's happening right now. But that's much more a speed bump versus this broader adoption shift to just more patio space per yard within housing in general. So it's a pretty exciting trend.
So there's an opportunity as a business owner to target communities that have been developed at some point in the last 7 years because the builders probably under-delivered on what they could have potentially done. given all the squeezing that we're seeing, one. And two, the backlog of materials and labor and everything means a lot of home renovation projects, or at least of significance, these home renovation projects have also been delayed. So there's a window of opportunity. And you know what? That makes a lot of sense from the perspective of, we were doing earlier this year at our events, we were hosting these roundtable discussions with our contractors, our Techo Pro contractors, and we were asking them what they were seeing as trends in terms of which clients are biting and buying and which ones are not. And what was consistent was those with the deeper pockets to invest, those who are looking at an extensive investment in their backyard, meaning 75 to 100,000 and up. And that 75 to 100 was just based on market specifics. If you're closer to an urban center, it's closer to 100. If you're a little more rural, it's closer to 75. But ultimately, that was kind of the threshold. Everything that was above that number, those clients were jumping and signing and wanting to get on board now. Everything that was below that number, they were hemming and hawing and concerned about the economy and interest rates and all that. So that seems to fit well, because if I bought a house in the last 7 years and I haven't put a lot of money into it yet because I don't have to, because it's new, I have the disposable income to say, we're going to do the backyard. Now we're going to do it for real. We missed the boat the last few years. We keep trying to hire someone and they keep telling us it won't be this year. It'll be maybe next year or the year after. Now let's make some moves. So those two worlds, or those two perspectives, are coinciding with what you're saying. Like it seems to be making a lot of sense to me. This episode is brought to you by Hardscaper.com. The Hardscaper mission is to empower industry.
We think the home improvement market especially is really shifting, really different than anything we've seen, at least in my career. I've been in the space about 20 years, been through the financial crisis. I've seen kind of both sides, spent some time in finance too. One of the things that raises my antenna that we need to pay more attention on is when you see these really bizarre outliers. So I'm talking about the last 24 months. If we look at things like the birth rate among women who are 35 years old, college educated, 35 to 40 to 45, it somehow has gotten lost in the headline number. Birth rate's been declining for 20 years. It's a big deal. But among that group, that cohort, who's kind of our home buyer cohort, it surged 3 to 4 to 5 standard deviation swing versus prior trend upwards, meaning that we have a whole bunch of people that have made major life changes very differently than what they did for the prior 3 years pre-COVID. And I'm not claiming it's because of COVID, but it's in the numbers that we're seeing pretty major changes. They've got either a very, very low mortgage rate, or they're looking for a home because they have a family situation that doesn't fit their current backdrop, where they're living. And the reason that I pick on that birth rate number is because we have like tens of thousands of data points around home buyers and home shoppers, what they do when they configure their home. And one of the things that we observe is that you could take the most price sensitive buyer, like the most entry level home in a housing market shop. They don't have much money at all to throw around. Like they're pretty stretched, especially in today's environment. But if you give that household a child, do nothing else, but that household has a child, they reallocate how they spend their wallet pretty significantly on some of the features of the yard. The two big winners are kitchen and bath, not a big surprise, but also the backyard. So that entry-level buyer, if you give them a child, is the most likely segment to opt for a hardscape backyard. And if they don't have a large yard, they'll still buy it as long as you put some patio materials in there. So, that seems like the type of trend that's not going to shift very quickly. If you have a child a year ago and the economy goes south, you still have a child now, and you'll have a child a year from now. So
Yep.
these things tend to be sticky. So yeah, we like seeing that.
Kitchen and bath, no brainer there in the backyard. But the backyard, whereas maybe when you and I were growing up, the backyard was this expanse of grass with maybe one of those play things in the corner and a tire swing. That's the backyard. That's not a backyard anymore, because I don't want to spend my Sunday morning mowing the lawn. I want to spend my Sunday morning with my kid or chilling or whatever I want to do, but I don't want to spend it maintaining my property. That's the major shift that we've seen, and I find it very interesting. How do you know that that shift is to more hardscape, though? Like what data is telling you that? What do you have access to?
Yeah. So what we've done with the home builders is, if you think about their incoming interest list, their funnel. So these are home shoppers that are in the process of configuring their homes and buying their homes and choosing what products that they want to have on their homes. And so we partner with them to understand, like, what exactly you're putting in this home. What are you willing to spend more, and what are you not willing to, like, let's watch and see whether substitutions happen.
Yeah.
And so one of the options that we put out there is, like, what size lot are you willing to pay for? Are you willing to pay for, a 2-stall garage or a 3-stall garage, or all these other configurations? And one of the options there is, hey, do you want this big backyard? Or if you're being forced into a smaller yard because of affordability, will you spend an extra chunk of change on making sure that it's paved? And will you opt for that home versus the home that's not? And so what we see among that buyer with a child, even if it's the most price-conscious buyer, which is why I pick on that one, because everyone wants the hardscape backyard, but it's the most price-conscious one that's going to cause this market to cycle right now. That buyer is still opting for that backyard with that piece. So if they're not getting it in the home they're buying right now, that's a remodel candidate in the next 2 years.
Within the next 7 years, it will happen.
Yeah.
Yeah. What advice do you have for people in our space based on what you know? Like, what I was shooting a couple suggestions of things that I could do as a business owner operating in the space, but what would you recommend?
2 things. So what they should be expecting for right now and coming into next year, this is probably going to be a pretty volatile quarter or two right in front of our noses. Part of that has to do with just the timing of all these projects. And we're seeing a pretty significant pause, not cancellation, pause, because we do a lot of primary research on this around home improvement projects right now, especially some of these ones in the backyard. Every bit of data point that I have tells us that these homeowners are deferring. They're deferring because they can't move into a different home. They can't afford to re-up into a home with a much higher mortgage. All those costs are prohibitive, so it's really, really inexpensive compared to moving to improve and fix some of their existing homes. So I would get really smart with their marketing dollars. Think very hardly about exactly where they want to grow and target. There are pockets of the nation that are loaded with newish homes, like we talked about, that were built, in the reasonably recent past, say the last 7 years, the last 5 years. We know exactly where those are, and find the ones that have the right demographic makeup and that have under-indexed on outdoor patio jobs, because there's a really good chance that those are exactly the households that are festering right now, that are they're gonna come to market. If not in the next 3 months, they will for sure in the next 18 months. It's just a question of when they are and who's going to get that job.
So it's more expensive for me to move, start over, way less expensive to renovate or improve where I am. I'll get far more bang for my buck doing that. So financially, that makes more sense. And that's why I should be targeted as a homeowner. If I'm in that position, that's who I need to.
Yeah,
that's who I'm. I am that person who's going to be investing in my backyard.
Saw such a bizarre phenomenon happen the last 3 years. Everyone here has stories around the housing shortage. 30 people trying to buy. Someone lists their home on a Friday. 30 different buyers coming through, all touring at the same time, and then they have like a stack of offers on a Sunday, and they choose who they want. Well, a lot of those cases, we're hearing cases now where, those homeowners who bought under the gun, they really didn't do their diligence on like, is this the yard? Is this the yard that they want to live with for the next 10 years? Or is this the school district? Or is this, it's kind of like for lack of a better analogy, you go to Target, there's not many pairs of jeans available. So you buy what's there and it doesn't really fit very well.
Yeah.
And now you're stuck. Now you can't move.
Yeah.
And so your option is to alter. And backyard is one of the places that's going to be the easiest for them to improve. So yeah, we think it's a pretty interesting space.
Very, very cool. Any other recommendations?
The only other thing that we think is, and I'll maybe give this context in the broader home improvement backdrop. And I really mean this. This decade that we're in right now, 2020 to 2030, we've done a whole lot of work on this. We think this is a very special decade in terms of remodeling activity, home improvement activity. We're seeing it in some of the fact that the Fed's raised rates as fast as they have and new build construction has not died, that the builders are still doing pretty well, way better than Wall Street expected them a year ago, is a signal of something more meaningful, we think, which will cascade into increased home improvement. So we're calling this decade the golden age of remodeling, but with kind of a squirrely downturn in the middle. That's exactly where we're at right now. It's a more of a comment on the levels of remodel projects per household for a whole bunch of reasons that are all coming together at the same time. That's happening at the same time as there's a pretty astute labor shortage, which will get worse and more difficult over the next few years as we're seeing the workforce thin out. And what we think, if that's correct, this means that the overall homeowner is going to be embarking on a whole number of home improvement projects that they haven't touched in the past few years, partly because they've deferred them for the past 15 and they've under-improved on their home, and now it's finally coming to roost, or they have to move. So, this is a special time. You don't want to miss this window. Yeah, be deliberate. And also make sure that you don't get surprised by the timing of this. We could very well end up in a situation where like the overall volumes suddenly feel like they did in 2020 and then 2021, where things are slowing down really, really quick, and then we see whipsaw where it bounces back. Yeah,
well, it makes a lot of sense. We ramped up. Everyone was stuck at home. They had no choice. They had to spend money. Well, they didn't have to spend money, but like there was nothing to spend it on other than home renovation projects. You couldn't go anywhere. You couldn't do anything. And you were stuck looking at the house that was dissatisfying you all this time. So you took action. We spent the money. Then everyone was allowed to go outside and play again. That things started slowing down, but all the government intervention during the time of COVID to keep the economy going, that forced increases in interest rates, which slowed people's spending down. But they're, like you said, if I had a kid in 2020, I still have that kid in 2023. I still have that kid in 24, 25, 26. If I bought a house any time in the last 5 to 7 years and I didn't do the extensive renovations, I'm going to do them. I feel like I missed my window and now interest rates are high. But once things give me any signs of like more positive outlook over the next couple of years, I'm going to do that renovation. So that means, like I really like the way you said that. Golden age of remodeling with a squirrely patch in the middle. And that's where we're sitting right now. The next 2-3 years are that squirrely patch. And it makes a lot of sense. It'll rebound because there will be another backlog caused by different reasons. And if you're smart, we've talked about this on a lot of different episodes of the show, but working on optimizing your processes, building out the team that you have, making sure that you have the right recruitment and training strategies in place so that you can have a solid business, that will put you in a position to capitalize on those situations when they arise, because they will. It's always a cyclical thing. It's just that it seems like the cycles are far more compressed than they have been historically. It used to be like a whole decade, and now it's like every 5 years we're up and down and up and down. But that doesn't mean it's going to last. Well, what that means is it will not last very long.
Yeah, it's a really unique time. And here's the thing that I think gets ignored. If we believe, as most in the industry do, and we can fight about the specific number, but that we're in a housing shortage, that you can look around in your market and there's just not as many homes available to buy versus how many people are looking to buy them. the history on like what happens to the home improvement market when there has a housing shortage is super clear. This happened 100 years ago. There's forgotten depression that no one talks about because it was poorly documented in the early 1920s.
Okay.
The setup was pretty similar to, you hate drawing too close of analogies, but it was post-World War I. We saw a pandemic. We saw, double-digit inflation. We saw labor shortages. And interestingly enough, coming out of that, building material shortages over a year. Then the Fed, which was brand new, newly formed in 1914, raised rates just about as fast as we see happening right now. And this was before they were as technical as they are right now. And they made a big policy error. They pushed the economy into an outright recession, which is what some people are worried about, maybe next year with this inverted yield curve. That happened in 1920 and 1921. Housing starts fell about 20%, which is about the number where they've fallen right now.
Mm-hmm.
And what's really wild about that is that's the only period that we have any data on where, the sentiment at the time was that they were about 3 years underbuilt, 3 years behind in building homes. And so as soon as mortgage rates came down, it was a different financing mechanism there, but as soon as rates came down like a fuzz, not even all the way, but just began to ease, that 20% decline in housing starts surged to an 80% growth. I mean, it was like the mother of all bounces.
Everyone's feeling they're feeling they need to hold back, but they don't want to. So that's right. As soon as they get an indication, it's safe again.
Yeah. So we're not saying that's the number. 80% is maybe too silly of a number to put out there, but
another surge is very possible.
Yeah, that's right.
Super interesting. Todd, is there anything else you want to share with us today before we sign off?
Continue to do your homework within home improvement and building products. And congratulations for being in one of the most relevant categories of the U.S. economy, likely over the next 5 years. If we have what happened 100 years ago happen again, this will be one of the categories that we've been very fortunate to be exposed to because it'll be one of the most resilient.
Amazing. You can't ask for a more positive outlook than that.
We're happy to be here for sure.
100%. Absolutely, we are. Todd, thank you so much for joining us on the show. A lot of our listeners like to reach out to guests that we have on the show. We have contractors who listen. We also have dealers who listen. So there's some people in the B2C, some people in the B2B space. What's the best way for them to learn more about Zonda or to get in touch with you?
Our website is zondahome.com. They can see some of my profile and background information there, but all sorts of other people too. It's an exceptional bit of research. They can get access to some materials there for free too. Follow me on LinkedIn also. There's additional things that sometimes come from our paid research that sneak into that. It's a great content if you can get a hold of it. Mm-hmm. We're doing incidentally a free industry forecast for the broader home improvement industry at the end of this month. So if they want to do that, come to our website and log in and they can listen for free.
Fantastic. Awesome. Well, thank you very much for joining us. And until next time, everyone, work hard, pave harder, and we'll see you next week on the Hardscape Growth Show. You've been listening to Hardscape Growth, a podcast for hungry professionals who want to grow their businesses and level up. Each episode is all about taking the next step in running your business, so make sure you never miss a show by subscribing on your favorite podcast player. And if you're finding this information to be useful, help others in your position discover us by giving us a star rating and leaving a comment. We'll see you next week.